Hello guys, welcome back to the channel. So we're going to go over euro dollar today. So it's been a hot topic, I think, on a lot of people's radars recently because it's essentially been free money. So I've been short on euro dollar since August. If you go back on my channel, you'll see a video of me calling out a short on euro dollar. Now, it was a bit early, but that's trading. It can never be perfect, but the idea I've had has finally come into play. So let me show you some of the positions I'm in on euro dollar. So you can see here, these are obviously sort of DCA positions. I've been short previously, but these are the most recent positions or the current ones that I'm in. So you can see I've split up my positions into 0.1 lot sizes, and that's just so I can mitigate risk, and that allows me exposure to then scale in as price drops or as price rallies to the upside. I can keep getting into more shorts. So you can see here, entered on the top of this wick here, then scaled in slightly after, and I've just continued to add these positions in. Now, it's not been smooth sailing. Obviously, we're not seeing this sort of waterfall drop that we've seen previously on euro dollar, but that's completely fine. In my opinion, this market remains bearish over the longer period of time or the longer time frames, even though we might have some noise or some volatility in the short term, whether that's with me or against me, it doesn't matter. So if we have a look here on the dollar index, there's a few things that we need to pay attention to. And first of all is the election. So you can see I've got it marked up here, Trump elected 2024, and we've got the US election marker up here as well. So essentially, since we've had the US election, the dollar has been on a bit of a scary rampage, really. It's been very unforgiving for any bears, and it's been very profitable for any bulls on the dollar. So something to keep in mind, what we're coming into right now is a major level at 107. So you can see previously, this was back in October 2023, we started forming this level of resistance. We've rejected once, twice, failed to even reach, and we've just rejected again on the 14th, so a couple of days ago. So now it's going to be a key watching point. Can the dollar finally break this 107 level and continue to the upside, or is this the ceiling? Is this when we start seeing buyers taking profits and we start seeing sellers come into this market? Now, the reason I'm saying no is because we've got a few economic factors here. So if we look at growth for Eurozone and the United States, we've got weak domestic demand for the euro, and the US dollar is slowing, but it's resilient, and this is applying downwards pressure. Inflation, we've got sub-target disinflation for the euro. We've got core inflation may rise slightly for the US dollar, and I'll go into why that's important in a second. Rate cuts are continuing for the Eurozone. So obviously we know that the ECB is looking or is cutting rates quite aggressively, especially in comparison to the Federal Reserve. We've got rate cuts pausing due to inflation. And this is what I just mentioned about core inflation rising slightly. So it is expected, or there's a slight expectation, that the Fed might pause or hold rates in December rather than cutting another 25 basis points. Geopolitics, tariff risks in China. Tariff risks and China exposure for the euro. Got trade disruptions favor the US dollar. So obviously there's a lot of factors here coming into play to drive that euro dollar pair lower. So if we have a look here, we've got our central bank forecast. So we've got the Federal Reserve, we've got a 39% probability of a hold and a 61% probability of a cut. And again, this is in December on the 18th. So this may change, obviously. Well, it will change as we get more data coming out for the US dollar. However, at the moment, I wouldn't be surprised if we do see a hold. I've actually been pretty correct on the Federal Reserve central bank movements this year. I think I got one wrong. I think I thought they were going to cut in July and they ended up pushing it a bit later. But other than that, I've been pretty on the mark there. So for now, you can quote this back to me in December. I may be wrong, but right now, a hold does make sense. The European Central Bank, you can see a 78% probability of a cut to 3%. And we do have obviously other information, but this video is specifically about euro dollar. So we'll leave it at that for now. And then if we go ahead and have a look at seasonality, this is putting a little bit of a bad taste in my mouth. But again, seasonality is based off historical performance and doesn't have any way of accounting for the current market drivers. So it's not something I'm going to base an exit off purely, but it's something I am aware of, that I am ready to take action on if I need to. So here, if we look at the euro seasonality over the past 5 years, 10 years, and 15 years, we're coming into a very bit bullish period towards the end of the year here. So you can see we're currently on the 19th of November, and then up until we have the 30th of December, it's very bullish. Again, this is historically. Similar thing here, well, actually opposite thing here with the dollar. We're coming into almost the peak here. Again, this is 5, 10, and 15 years. And then we have a look at the end here at the 30th of December, so the end of the year. We do see a decline here typically. But again, this doesn't account for the overall market macros at the moment, so it's not really an issue. It's just something I'm paying attention to. So lastly, on euro dollar itself, what we are looking at here is essentially one level. We need to see this 1.05 level get broken to the downside, because as you can see, it's been acting as a very, very strong level of support since January 2023. So almost a year, or almost 2 years actually. This has been a bit of a problem really for the dollar. So essentially, I'm looking for this break, and once we see a break of this level, it wouldn't surprise me if we do see euro dollar start to melt. It would induce more sellers into the market, and buyers might then get out as we've broken some major level to the downside. Now, parity is an interesting one. I've heard it get thrown around quite a lot recently. So if you don't know what parity is, it's essentially just the $1 level. It's when a euro is the equivalent of $1. So the prices are exactly the same. However, I am currently not in the idea that we will see the parity level come into play anytime soon. If we see the Eurozone weakness and the ECB rate decisions continue the way they are, with a continuation of the positive dollar data as well, it could happen within sort of 2025. However, at the moment, I'm not looking to hold into parity. I'm more looking for a break of this 105, a complete sweep, and then I'll start looking to take profits and maybe get back in on a larger daily pullback if we can get one. If not, that's completely fine. The way I'm positioned at the moment, and my take profit level, that's in the Discord, by the way, if you want to know more about the positioning itself. If you want access to profitable signals with professionally written trade ideas to back these trades up, and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. I'll earn about 16% gain. So I'm completely fine to not hold parity, because in my eyes, the way I'm positioned, if I can just continue to hold and make 16%, there's absolutely no problem there at all. So that's about it regarding euro dollar at the moment. I mean, we do have technical levels even further down here. You can see at the 0.955 level, and this was actually last time we broke below parity, we did end up sort of I'm going to say peaking, but obviously it's the opposite of a peak, isn't it? We ended up sort of, peaking at 0.95. So that may be another level to look at. If we do see Eurodollar continue this plummet to the downside that does somehow break the parity level, then we can look to possibly start buying Eurodollar at this level. Now, the one last thing I'm going to say here is the Bollinger Bands. So Bollinger Bands are used mainly for mean reversion strategies, and the reason is, I'm not going to go into that strategy in this video, but the general idea is you sell at the top of Bollinger Band and buy at the bottom. So you can see historically and typically we do start seeing this sort of work out if you can manage positions properly. Now, the way a Bollinger Band works essentially is it shows you the mean or the average price of that asset. Now, obviously we can see changes with this. Just because it's at the bottom of Bollinger Band doesn't mean the market is going to start flying to the upside or vice versa, but it is something you need to pay attention to. So you can see when we've reached the bottom, we consolidated, and this is the daily time frame, for quite some time, and then dropped again. And now we are, back at the bottom of this Bollinger Band now. So it's something, again, I'm paying attention to. It's not enough to sway my idea because I'm trading the economics rather than the chart itself, if that makes sense. So yeah, paying attention to this, but so far completely happy to stay in my short positions for the time being. And if there is any major changes, I'll let you know.